Hey everyone, Steve here. I read the details of the PPP, or Payroll Protection Program, that is part of the $2 trillion CARES Act that was passed by Congress and signed by President Trump. What I realized after analyzing it is nothing less than shocking. It's a death trap or even a scam for those who don't look closely at its provisions. As the name states, Payroll Protection Program, its intention is to help businesses keep their employees in their payroll so they would not be laid off during the pandemic. This is a smart move on the government's part because every employee that loses their job now will seek unemployment benefits from the state and also qualify for the $600 per week in federal benefits. I live in California, so for example, a laid off employee will qualify for up to $450 per week from the state's unemployment office and get $600 from the federal level. That's $1,050 per week to stay at home. They have dropped the requirement to look for a job also because there's actually no jobs available out there. That's not a bad deal to do nothing, basically. Okay, before I move on, I must mention that I'm not a lawyer, an accountant, or anyone qualified to give any advice about the law. I'm simply giving you my opinion, so please consult your accountant or attorney before you take any action. Okay, so let's continue. So by giving you the PPP loan from your local lender, which is backed by the SBA, the government is essentially offloading their burden of paying for unemployment benefits and letting you, as the business, take this burden in the form of a loan. Let's talk about first and foremost the most obvious misconception about the PPP loan. The government promises that if you take this loan and keep your employees, the loan will be forgiven. That's how it's advertised. So let's talk about the details. This is a 2-year loan with a 1% interest rate. You can defer the first payment of the loan for 6 to 12 months. To qualify for forgiveness, 75% of the loan must be used for payroll and payroll-related expenses. The other 25% can be used for other qualified business expenses. I'm not going to go into the breakdown because you can simply Google the exact breakdown of this online. Now let me begin by making my point number 1 on why the PPP loan is a death trap. First of all, according to the provisions of the loan, you have to reestablish the employee headcount of your business to pre-pandemic levels by June 30th, 2020. If you didn't know there was this requirement and simply took the loan to pay for your employees that you didn't let go, the government will only forgive a portion of your loan according to a ratio of the original pre-pandemic headcount, which ultimately means your loan will only be partially forgiven. The headcount does not have to be original employees and can be new employees. Now here's the kicker. When you report the amount of your monthly payroll expenses when you apply for the loan, the lender will give you approximately 2.5 times your monthly payroll amount. This means it will help you stay afloat for roughly 2 months. Remember, only 75% is allowed for payroll. The other 25% must be for other business expenses. So basically, this loan allows you to stay afloat for approximately 2 months. I don't know about you, but if I was a business who desperately needs this loan to begin with, and had no other choice but to let go of some of my employees because business income just collapsed, how is 2 months of payroll coverage going to help me? So in this current business environment, is business going to suddenly pick up after 2 months and I can't afford to keep all my employees after that? I think we can all see the answer to that. I even doubt I can rehire those employees I let go to establish headcount because they're getting free money every week. So as you can see, this is a 2-month band-aid that makes no sense unless the economy suddenly turns around in 2 months to pre-pandemic levels, for me to meet the pre-pandemic number of employees. Now for my point number 2, let's assume you get over the first hurdle, or point number 1, and you rehired all your employees to pre-pandemic levels by June 30th, 2020. You have yourself a 2-year loan that your business has to pay back. Business does not pick up as expected after 2 months, and your payroll costs are the same as pre-pandemic levels. So what are your choices at this point? 1, you have to let go of your employees, which means you have to break the provisions of your loans anyway after 2 months, and now you're stuck with a loan that is only partially forgiven. Or 2, you pray there's another payroll protection program from the federal government so you can pay for your employees for another few more months, which means more debt for your business. And the cycle continues. Don't forget, this would be debt upon debt added to your business. And this debt from the PPP loan program must be paid back in 2 years. So your business must generate enough cash flow within these 2 years to pay back the part of the loan that is not forgiven by this program. This is a seriously risky bet on the part of the business owner. Let me get to the third and final point for this program. The CARES Act specifically states that this loan must be a non-collateralized loan for the business, which simply means you do not have to put up any business assets as collateral to get approved for this loan. But as we all know, the law is simply a law. The lender, in most cases, banks, have their own ways and means to protect themselves. If you read the contract carefully when you sign the loan agreement, most lenders explicitly has the right to sue the business to recover the loan in case of a default. This is scary given that your business is already on shaky ground from the current business environment, and you have the potential of a lawsuit to deal with if you cannot meet the obligations of your loan. So to wrap this up, my ultimate point is that unless you're in an industry that sees your business picking up to near pre-pandemic levels within a time frame of 2 months to meet pre-pandemic employee headcounts, or a business that is already doing fine and you haven't laid off any employees, you essentially do not need a loan, but simply want to take advantage of the loan forgiveness part and have 2 months of your expenses paid by the government. Unless you're in one of these 2 scenarios, the PPP loan is a risky bet. I hope you guys liked this video. My goal is to bring you guys insightful videos that will ultimately help you make better decisions in life. Of course, if you like my videos, please smash the like button, pound the subscribe button, and whack the bell icon so I can bring more of these videos to you in the future. Okay, see you in the next video.